Hey, what's going on, guys? Just going to talk quickly about the trades I've had over the week of Monday, the 13th of January. Super happy to report it's the fifth winning week in a row now. It's been going really well. The balance is up to 2,674. Again, it was quite a swingy week, but happy to be in the profit. So we'll start out with the first significant trade of the week, the pound dollar. We had this on the Monday at 6 o'clock. And again, this was one where the emotions got the better of me, and I got out at the top of this green line here, which financially, in this scenario, when I use this term financially, it was the correct thing to do. I mean, in this specific scenario, it was the correct thing to do. However, the system that I've been developing determines the take profit before, and it predicts direction and momentum. And so in the long run, if I'm taking my profits early, I'm going to massively decrease my average risk to reward ratio. And at a 30% win rate, which is what this strategy is, I'm going to need to be going all the way. So I need to be careful here. In this specific scenario, it was the correct thing to do, but I can't let that influence me, and I can't let the thoughts come in like, oh, I'm a genius trader, I know when it's going to turn, because that is going to get the better of me, and that will be my downfall. But in this scenario, it was the correct thing to do to get out early, and we netted a profit of 196. If we hadn't gotten out there, it would have crashed down to negative 50. So it is what it is. I just need to keep this in mind. I need to just put the trade on, leave it alone, let it ride. And in the long run, it will be the best thing to do. And here is a perfect scenario of that. So we had the euro yen, and our original target was a 4.98 risk to reward, which very much would have come in. This would have been a huge trade. This would have been a $250-ish trade, hitting the take profit really nicely there. But little old me let the emotions get the better of me, and there was some rejection and stuff up here. Come up here, bang, massive rejection. I'm freaking out, I'm panicking, and I got out early. And this is really, really not what I need to be doing. We netted £17 instead of 250. So yeah, really unhappy with that. Not great at all. That is my big challenge for the next couple of months. It's just to let my trades ride no matter what, because I think I'm seeing that I'm getting out correctly a couple of times, and like I say, it's influencing me, making me think that I'm some genius who's better than the hundreds of hours of strategy that I've developed, but that's just not the case. So I'm either going to learn the hard way, and the strategy is going to start to become unprofitable, and then I really have to buckle up, or hopefully I can get a grip of this and get on top of it before it becomes a problem. And then on the pound dollar, we had on the is this a duplicate? No, Monday at 11 o'clock. We had a little trade again. I just jumped in. I thought, I shouldn't have gotten out early. Jumped in, made a little bit of profit, jumped back out. That was just silly trading. It's nothing to do with the strategy at all. And then comes some karma the next 3 days, the next three trades. On the Thursday, the Aussie dollar. Yeah, this is a weird one. So I haven't done too much research on this, so I probably shouldn't be trading it. But we had a sell signal here at 2 in the morning, which I was not awake for. But then by the time I woke up, this was 10 in the morning the following day, or that day. And price was still printing negatively. It was still all red, and the STC was red, and we was very close to the initial entry. So I thought I would try my luck and get in, but that did obviously not prove successful. So I should probably avoid these getting in later where the price has come back to the entry, but the setup's still valid because I haven't done too much studying and development on that. So that could definitely be something that burns me, and I'm probably going to stay away from these from now on. I was probably just a little bit eager to trade. Then the euro yen on the Friday morning. This was an okay setup. I mean, the setup coming at 2. Well, this wasn't even a valid entry because the STC was still red. So this was actually a valid trade, completely valid. I haven't gotten in late or anything, but unfortunately it gets stopped out. We just get tickled out here. Then it comes back up. We would have been in profit here, but it doesn't matter. We just got tickled out. And then on the final trade of the week, the Aussie dollar yen, should put an L in there. We got out of this early because this was this would have been holding it over the weekend. We got in the trade at 2 o'clock, and it come up to about half our take profit actually, but crashed all the way back down. And I didn't want to hold this losing trade over the weekend, which I think is okay considering I've had some burns with slippage, as you might have seen if you watched the last video. So getting out early in this scenario, I think is okay. I'll find out next weekend whether that was or not. But yeah, those were the trades of the week. I'm going to talk a little bit now about the developments I've been making. So if you're only interested in how the weeks are going, then I'll probably tune out now. But yeah, I'm going to talk quickly about what I have been developing. I've developed this new system around the trading, where before when I was doing this, I would have been taking, like, let's just look at this one, for example. Let me edit this. So no matter how long my entry candle is, my stop loss would have always been at 3 pips below the entry right here. And then if you've seen the original set, how I make the setup videos, I do that, and then I'll put my take profit at least a 2 risk to reward ratio at a significant level of support or resistance that has come previously. However, what I learned is that some candles are really, this strategy, it predicts the momentum and direction, and some candles are significantly long. This isn't the best example here, but this is a 350 pip move. And so I thought, what if I can tighten my stop losses somehow, create a system to start tighten my stop losses and keep my take profit in the same place to net a significantly more, a bigger risk to reward ratio. And so that's exactly what I did. I trialed and errored a few different ways of doing this, but eventually the system that I come to was looking at the 2000 simple moving average ATR. So in this scenario, at the start of the month, so in this scenario, the 2000 simple moving average ATR for the pound dollar at the end of November, the beginning of December, would have been 155. So I'll look at that, and then I'll mark out my trade. I'll put my take profit on. This is an old trade where I've got 1.95. Yeah, I'll put my take profit on. I'll do my full trade setup that I was doing before, but the only difference this time is I'll actually move my stop loss to 150. Okay, and this is a really bad scenario to show you, because in this one, it would have become a winning trade to a losing trade. But that obviously does happen, tightening your stop losses. But the key point to take away from is that I tested all 2,500 trades that I've recorded over the last 4 years, and doing this proves very, very profitable. It's improved the results so significantly that it's almost hard to believe. So I'll show you just quickly. Here we go. This would have been the 2023 trading all pairs starting with 2,500. By the end of 2023, this would have been the worst year that I tested. This only would have netted a $1,200 return on your $2,500, which 50% return on your money is pretty good. However, I call it Plan H because I just had all these ideas written down. I called it Plan A, Plan B, Plan C, tried them all. But anyway, with Plan H, that then turns into starting 2023 with $2,500 and ending up 2023 with $12,500. It increases the risk to reward ratio so significantly, it's unbelievable. And this is indeed taken into account all the times where this trade is the perfect example. Trading it how we done traditionally would have netted a 1.9 risk to reward, and in this we would have put the stop loss to 150. This would have then lost. So I need to take out the fact that a 2 risk to reward would have been a £100 return for me. So I've actually, I've not only lost out on the £100, I've also lost out on the 50. So I've, decreased the results by 150 and put this against all 2,500 of my trades that I've recorded over the last 4 years. And yeah, it's improved the results very, very much. And the next thing I had was the 9 o'clock candle. I looked at every single 9 o'clock candle I had over the last 4 years, and there were 26 of them lost and 21 of them won, which is obviously crazy. I'm thinking it's to do with the market closing at 10 o'clock and the spreads widening and stop losses getting hit, low volume and stuff like that. So anyway, I re-crunched the results. Say you can use 2023 here, for example. The original results we had for this were 3,690. This is the balance you finish on for the year. Then with Plan H, it was 12,548. And then with no 9 o'clock candle, because there were obviously 9 o'clock just loses, it wasn't actually too much difference here. It was a $100 difference. It makes more of a difference on the other years. But yeah, I just keep introducing these new little factors, and I trial and error them. I test them. I don't incorporate them into my trading unless I can test them against all 2,500 recorded trades over the last 4 years. And once I do incorporate them and test them against those trades, if it's profitable, I introduce it into the system. So yeah, there's 2 really significant things that I've just introduced. And like I spoke about last video as well, One thing that I haven't taken into account that negatively impacts me was the overnight charges when the market's closing at 10 o'clock and reopening. A little bit of slippage obviously is incurred. So where did this happen? Trying to find the example of where this happened on the pound dollar, but here it is. Oh, that wasn't the one. That was a pretty good example of slippage right there, actually. But yeah, anyway, I hadn't taken this into account fully when the market closes, and also I hadn't taken into account the fee that you pay for holding the position, or the fee or the refund that you pay for holding the position. So I got every trade for every year. This is just my 2024 sheet, and I marked whether it was held overnight, marked whether it was long or short, calculated the position size off the risk amount, and from that I could then calculate the funding refund or the funding charge. And once I had all the funding refund and funding charges, I could then incorporate that into my compound interest, because obviously the results are compounding, etc., etc. And yeah, like I said last video, it did have quite a significant impact. But the system is still very profitable. So we've had 2 positive incorporations, the no 9 o'clock candles and the Plan H, and 1 negative incorporations. And this is how it's going for me at the minute. It's a roller coaster. I come up with a brand new idea that I can test against, and it massively improves the strategy. And then I come up with something that I forgot to take into account, and it has an impact on it, negative impact. And so it's just up, down, up, down, up, down. But yeah, at the minute, it's still proven to be really good. And like I say, 5 winning weeks on the trot. We're obviously eating this opening negative 300. We had to eat that. That brought us right down. I think, yeah, no, negative 3. We was down £400 at one point. We was down 300 over these two weeks. Then we started this week with a negative 100. So 2,100 was our lowest. 2,800 our highest, but we're on 2,674. So I'm just going to spend the following weeks and the following months of this year grinding out the trades. My big goal is to not take my profits early. As you see right here, this absolutely fucked me. This would have been a lovely 4.98, but emotions got the better of me. So that's one thing I really, really need to work on. And I think if I can become a bit more emotionally adept and get a hold of that, get a grip of that, then I think this is going to be a really, really wild and fun year. But yeah, thanks for watching, guys. A little bit of a longer video just talking about the developments and stuff like that. I will be back the following Saturday with how this week's trades go. But yeah, good luck in the markets, guys. Thanks for watching.